The 7 lively spices in French's mustard are the best thing that's happened since the Earl of Sandwich.
When it comes to making deals, Wall Street is no fan of mustard. Pantry player McCormick paid over $4 billion for French's and Frank's. Is there a secret ingredient the market is missing?
Well, we know that things have gotten very difficult for the supermarket industry lately, and that pain is making life more difficult to the food plays that supply grocery stores all over America. In order to make it through this period, I think the packaged food companies need to merge with each other so that they'll have more bargaining power relative to the supermarket chains, of course, and to Amazon. But is that enough to make these stocks worth owning? Consider the case of longtime Cramer favorite McCormick and Company, MKC. It's the world-leading maker of spices and seasonings. You know I love the cook-at-home thesis. For years, McCormick's stock has worked its way higher, slowly but steadily. However, in the past couple of months, it seems to have gone out of style, maybe on the Wall Street fashion show. Even though the company reported a nice top and bottom line beat at the end of June, its stock is now down $11 from its recent high. Why? Well, investors have soured on anything that depends on the pantry. The question is, can McCormick banish the doom and gloom? Just last week, we learned the company is buying Reckitt Benckiser's food division for $4.2 billion, including French's Mustard, iconic name, Frank's Red Hot Sauce, Catalan's Barbecue. I think it's a natural fit. And like I said, the packaged food companies need to merge in order to stay competitive. But McCormick is paying up for these brands, which I think is why the stock fell 5% on the news last Wednesday. So as Wall Street misjudged the story, should we be giving the spice maker more credit? Let's take a closer look with Lawrence Kurzius. He's the chairman, president, and CEO of McCormick. Find out more about the deal and where his company's headed. Mr. Kurzius, welcome to Mad Money. Good to see you, sir. Thank you so much for coming on.
Hey, Jim, it's great to be here. It's really an honor.
I know you're a fan of the show, which is fantastic. I'm a fan of what you bought, because I'm from Philadelphia, we only do French's. That's what we put on our soft pretzels. Red Hot Sauce, it's just the natural thing that I happen to love to put on things because it doesn't put weight on. That's what you have to do these days. But here we go. J.P. Morgan said you paid 50% more than we thought. And Barclays said you're doubling down on the pantry. That's a mistake. So tell us why you did it and tell us how come it's going to work for you.
Well, Jim, what we're really doubling down on is growth and doubling down on flavor. We're a flavor company. Our brands are all about flavor, the seasoning, the wonderful foods that people today want to cook from scratch and making them taste good. We're one of the last growth stories really left in food, and these brands match up perfectly with that. In many ways, they're like liquid spice.
Okay, well, this is important because what I think people misinterpreted, particularly some of the older people who write about your company, is that this is the fastest grower in that whole aisle, isn't it?
That is. The Frank's is the real, Frank's Red Hot is the real gem in the portfolio of brands that we bought. This is a brand that was launched in 1920, so it's almost 100 years old, but it's really 100 years young. Millennials use this brand on everything.
Don't you think that millennials use it because you can eat as much as you want, doesn't put on weight, so you still look okay in the selfies?
Well, Jim, that's a good point, and I think that might be part of the formula.
Well, look, these are the two things. Look, instead of mayo, I switched to mustard, okay? Instead of mayo, I switched to hot sauce. The reason I did is because I'm on TV and I don't want to look fat, okay? I mean, I'm just playing. I don't want to, that's what I don't want to look. This is the way that you avoid it.
Well, Jim, beyond even the idea of fat, these products have simple, clean ingredient lists. If you take a look on the back, Frank's has 5 ingredients. Red hot cayenne peppers, vinegar, garlic, water, and a pinch of salt. That's it.
And that's like McCormick is, doctors always tell you to use McCormick because it is nothing other than the spice. That's always been your tradition, right?
It has been. But Jim, there's a bigger trend at work here, and that is younger consumers want to cook from scratch. Okay. They're more adventurous in the kitchen, and they want to make foods from the raw ingredients, not from packaged
Blue Apron, even though there's so much competition,
exactly.
because that's what they want.
But it's exactly. And in addition to cooking from scratch, they also want more flavor. If you look age group by age group, as you get younger and younger with the consumer, they have a higher and higher desire for spicy, flavorful flavors.
And that's just, is that nationwide, worldwide?
That's a worldwide trend. That is not just a U.S.
And
trend.
how did it happen? We've had IFF on. They say periodically there's just these trends that occur. But that wasn't my generation. What changed?
This has been a long time coming. But if you look generation by generation, it was still true even in the past. Our generation, spicy was, Italian was considered spicy. Then the next, it was Mexican, was considered spicy. Today, consumers are challenging themselves with all kinds of spicy cuisines, and the younger millennial consumer is the most adventurous of all.
No, I mean, we used Tabasco when I was growing up. Now, Tabasco, these guys have passed Tabasco?
that, I don't want to criticize another brand, and that is a great Louisiana
Yes,
brand.
it
And I
is.
spent a great deal of my life in Louisiana.
Zatarain's, which is another great name.
But in market share, Frank's is about twice the size of Tabasco. And the difference is you can really use Frank's. You can put it on thick. Tabasco, you can use a few drops at a time. But with Frank's, you can really slather it on.
No, Frank's, I mean, candidly, on Twitter, they use a curse word. You can put it on, I mean, your company, but your company is a Baltimore company that I don't associate with that, but I guess everybody in time, everybody's whatever.
Hot sauce is, one of the things about hot sauce is it's always associated with excitement and fun times and maybe a little bit of irreverence.
Okay,
so,
that's fair.
So I think it goes with the brand.
Okay, so what do we do first? The center of the store, people say they're not going, and then also the idea that there's other brands that come on Amazon that don't have any store presence and suddenly come out of nowhere and do well.
Well, Amazon's a tremendous customer of ours.
Right,
we have a strong presence on Amazon. We have a great relationship with them as a customer. We believe that consumers aren't going to be any different about shopping for food than they are about shopping for other things. Online is a reality. It's going to grow. And we're committed to being part of it. So this is something we've over-resourced, and we're really confident that we can do well in this area.
Okay, so there are. Let's go back to the original. JP Morgan said they priced this out at $2.8 billion, and you came in much, much higher. Were there just many other bidders, and you had to do that? Were you close to other bidders? Who else was involved, and why did you choose to pay so much?
I wish I could have bought my house for a discount, but if I had tried to, somebody else would be living in it. And it's the same with this. It's a quality asset. These are leading brands. They've got strong growth characteristics. They're on trend, and they're tremendously profitable. A lot of other companies saw value in this.
Right.
This has been at the top of our strategic list for over a decade, and we had approached Reckitt Benckiser about it more than once. When they decided that they were going to sell it, they knew that we wanted it, but there were others who did as well.
But do I have to worry about? I always loved your balance sheet, sir. It was the best balance sheet. Now it's not the best balance sheet.
Well, this is one of the things that we've been conservative with our balance sheet for. It's precisely to give us the firepower to occasionally step up, leverage more than we normally are, to buy the strategic asset that's going to grow the company for the long term. We did it when we bought the Ducros business, and today that is the centerpiece of our European business. We did it when we bought Lowry's,
which
and
was
today that is
win.
A great buy.
Yeah.
And nobody asked today what those brands cost.
That's a great look. I've been a backer of your company forever because I believe in the stay-at-home thesis, which is larger than life, and I believe that millennials like certain brands and they love your brands. You know what? You won me over on this. I thought you paid too much too, but I'm in your camp on this.
We're going to create a lot of shareholder value.
That's been your nature for a long time. That's Lawrence Kurzius, the chairman, president, and CEO of McCormick MKC. You heard about the price. You heard about how they've been waiting for this deal. They were obviously ready. And you know what? I can tell you, the younger people, this is what they eat. They really do. They have money's back yet to the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.